Good evening, the 17th of June, New York Stock Exchange hours, and good morning, Australasian Globex. Just having a quick look at liquidity. We've had a continuing recharging here of the VIX. I'm looking here at a CFD, which is probably one of the better proxies that I find out of all the different ones of where we're going with trading. We see we had a charging event going into 2 weekends ago when there were some fears of what was going on in Israel, and again it's charged up and we're back above, in the real VIX, we're back above the 21 mark. If we just look at the CBOE, just back above the 21, which is where it is much easier to charge the VIX from. It's just that tipping point that it's on the edge and it can go one way or the other. Let's have a look at the main indexes. The main indexes today, they definitely were high going through it. I'm wondering whether we're now into a position where, yes, we're going sideways, everyone waits to see, but there is a feeling that the market still has some room to go back up and do a double top. Having a look at what happened today in the SPX, we can see that it was another one of those days where we had selling. It could be early rolling. We did see some big, very large collars, or maybe even a butterfly around 2,300 in the money option contracts. So that may have caused a lot of this selling here, but you would have thought that it was pretty flat if it was, and we would have seen more buying if it was just a collar. So it does suggest that maybe they were positions that were being taken as a fly, with a lean on the downside. If we have a quick look at what retail thought of it, retail did do some more buying into the afternoon. We can see here we're well into the green in the irregular liquidity, and we can see we've drifted right down into a buying position. Probably not as strong as we did at the start of the day, coming off yesterday, which looks quite good. But retail definitely, we'll have a look at retail in the Qs. Retail definitely feeling happier about what's going on. We can see that this has carried through, this heavy selling has carried through into the afternoon. On the surface, there was definitely some people chasing this little bounce at the end of the day. I don't think anyone's made much, has gained much out of it. This bounce, maybe they've gone sideways, but they've definitely got out. The NDX was, again, much more like the main index. It was much more like the SPIX, so there definitely is people getting out. Having a look through the options this morning, there is a lot of hedging, and we're starting to roll out of in the money to out of the money, which suggests that the positioning is starting to be quite short over the short distance. Whether that's a correlation to or a compounding of the effects that we've got war, we've got FOMC, and we've got OPEX, that would make anyone worry a little bit, and we might see something else happen. The other thing to note was that the TLT had quite a good bump. It did have quite a good charge into yesterday afternoon, and we've seen that come through. There's been a good bump. But during the day, it's sold into it most of the day, and there's nothing really to see in the options. I've had a look. There's no big opening of out of the money puts, which suggest put selling. But we definitely, whenever we see a bounce in rates, in the bonds, and a lowering of rates, we definitely see the hedge funds the parity funds having to rebalance their accounts, and that tends to push the main indexes down a little bit as they swap around in their 40-60 portfolios. Anyway, thank you very much for this video. I think that we've got more sideways, maybe with a downside tinge, unless we get a very good FOMC today, and that's what all the hedging was for. If the hedging comes off after FOMC, we're going to have a nice squeeze. Have a great day's trading on the 18th of June. Thank you.